In March, a palpable sense of unease permeated the consciousness of U.S. consumers as they confronted increasingly bleak prospects regarding credit access. This prevailing sentiment, echoed in the findings of two meticulously conducted surveys, not only underscores persistent anxieties surrounding tightening lending standards, but also sounds a cautionary note about the broader economic landscape, historically sensitive to such shifts. The Federal Reserve Bank of New York survey illuminated the depth of consumer apprehension, revealing that a staggering net 68% of respondents anticipate a tightening in credit availability over the ensuing year. This figure, cresting to its highest point in 4 months, starkly contrasts with sentiments expressed merely a year prior when a net 70.4% harbored similar concerns. The underlying drivers behind this prevailing wariness are manifold and complex. Mounting levels of household debt, exacerbated by the confluence of rising interest rates and sustained inflationary pressures, have propelled lenders towards a decidedly risk-averse stance. Consequently, financial institutions have responded by tightening their lending criteria across a gamut of credit categories, spanning from home mortgages and equity loans to credit cards and automotive financing. Simultaneously, a parallel survey conducted by Fannie Mae underscored the magnitude of consumer trepidation, with an eye-popping 58% of respondents voicing apprehensions about the formidable obstacles entailed in securing a home mortgage amidst the current milieu. This figure, reflective of a notable 4 percentage point surge since February, marks the most significant monthly escalation observed since September. Moreover, compared to the preceding year, the proportion of respondents lamenting the challenges in obtaining a home loan has surged by a daunting 6 percentage points. This notable departure from the prevailing optimism witnessed between November 2015 and April 2022, during which the majority of consumers expressed confidence in navigating the mortgage market with relative ease, signals a profound shift in sentiment. These collective perceptions underscore a broader recalibration in consumer sentiment regarding credit accessibility, marked by mounting apprehensions surrounding the barriers to obtaining loans, particularly within the mortgage sector. Left unaddressed, these sentiments could portend a deceleration in loan growth, a harbinger historically associated with impending economic vicissitudes. As such, policymakers and financial institutions must remain steadfast in their vigilance, diligently monitoring and assiduously addressing these concerns to preclude potential adverse repercussions on consumer confidence and overall economic stability. As the drumbeat of uncertainty grows louder, a proactive and preemptive approach becomes increasingly imperative to navigate the potential economic headwinds on the horizon.